All right, part 3 of how should you pick your lender. In the first episode, we talked about looking at rates and fees and talking about the cost, looking at this strictly from a numbers perspective. We talked about how you can look from one lender to the next and how to compare. In the second video, we talked about working with someone who you can trust, who has the experience and knowledge and is working for you, not just trying to get the deal done. Well, in today's video, we're going to talk about, well, how did you find your lender in the first place? Who connected you and why? What's behind the curtain when you look at that? Jumping right in. One of the number one sources that clients will turn to when they're looking at their lender will be their real estate agent. This is the way the industry has worked for a long time. So people turn to family and friends, but when you make a connection with your agent and you're trusting them and you're working with them to find a property, you can trust with them and the experience they've had working with someone who's going to get you to that closing table. However, there's been this rise in mortgage companies that are owned by real estate companies. So we have to start to look at this and figure out, why is your agent referring this person? Sure, they say they do a lot of deals together. Sure, they say that they know they can trust them and they give you a lot of information that they would say because that's how you can sell someone, right? Now, whether or not there's a basis behind that, we don't know. But start to look at it. Who's the mortgage lender they're referring? Are they owned by that actual real estate company? We've got a lot of real estate entities that are looking to make this one-stop shop, which in theory is not necessarily a bad thing, right? But I'll give you an example. Working with a client, I knew they were working with an agent. They were working at Redfin. Redfin has a mortgage company. I know Redfin is very big into pushing their clients to work with their mortgage company. And they say, listen, work with our lenders. They're the best. They're going to give you the best deal. They're going to tell you anything they can because Redfin's watching. There's actually an incentive. There's actually going to be a big push and a pull through on their performance level on how many clients they get to go to their mortgage company, right? So I was talking with a client. They told me they were working with Redfin. My natural inclination, I thought, well, okay, here's where I need to tell this person to work with someone else. Maybe, and I have a myriad of reasons. I can tell you different reasons why maybe that wasn't going to be a good fit for the client. But while I was talking with them, something that they mentioned resonated with me. They said, you know what? I've been working with this client or this real estate agent now for the last year. They've shown me properties. I've really connected with them. I like them. I trust them. And I couldn't go against that. I couldn't suggest that this buyer go to a different real estate agent. I thought that they had a connection, the person was working hard for them, and they trusted them. So I didn't want to try and push them away in the fear that they might, try to steer them back towards their in-house lender. Right. So it's one of those situations where this happens all the time. We've got the owners of real estate companies out there who own these mortgage companies, and they go through and they talk to their agents and say, listen, you've got to give our people a chance. It doesn't mean they're good at what they do. Sure, we'd like to think they are, but that's not the merit. Now, think about the example of the Redfin agent. Had I gone through and I referred them to a different agent, they may have connected with someone or not connected, more importantly, and not really had the same experience. It wasn't best for the client. So when we're going out and we're looking at these companies who are really pushing on their people, they're looking at the bottom line. They're not looking about what's best for their client. So make sure when you're going through and you talk to someone and they refer you to their lender, find out why. Are they getting anything in the back end? Now, yeah, maybe they're not getting paid directly on this, but maybe it incentivizes their marketing budget or something within their company. And the companies are very clever, right? We have these companies as a way to generate revenue that gives back to everyone for a better experience. Don't buy it. Don't buy what you're being sold. Make sure that you do your due diligence and talk to a lender that you can trust, and make sure that the people that you are connecting is doing it for the right reasons. If you like this video, please remember to hit that button and make sure you subscribe for more information on how to help you shop for a home or other real estate needs.